What's good, everybody? It's your boy TBT, aka the Brainless Trader, and we're back with another video. We're gonna go over 4 different types of setups that you can profit from this fall. Now, we've got a 15-minute ICT Breaker, liquidity run, and fair value gap setup. This is a setup from August 22nd. This is a setup that I actually did get in. I got out quickly because I was at work, but I could have trusted the trade a little bit better. We'll talk about that. Now, what we have here is we don't necessarily have the run on liquidity that we would like. Now, we have a small run on liquidity, which I'll show you, but we don't necessarily have like the higher time frame run on liquidity similarly that we had like up here, right? We had that higher time frame run on liquidity, so we were kind of automatically looking for sell opportunities. Now here, what we have is price refusing to go above a certain area, right? So if you look, I haven't tabulated it yet, but we have this order block here, most recent highest up close candle. Now this order block here is a two consecutive candles, right? Let's zoom into it. Let's talk about it. This is two consecutive candles. So a lot of times when you don't get the liquidity run, you want to look for either a fair value gap that prices remained open, so look a fair value gap that prices left open and not traded back up into, or in conjunction with that, you can look for a larger order block range, either on your 15-minute or an hour chart time frame. If you're trading like just intraday, right? If you're trading in one day, you're looking for a zone that price just has not made it above. And I bet you if we were to look at the 50% area of this range, that area has not been eclipsed either. And that 50% area would be right here. I like to make it a dotted line just so I know what I'm looking at. And yeah, that's exactly what it is. So you can see that the 50% consequential encroachment area hasn't even been traded past. So let's say this is 819. Now we're looking on this day, 822, not sure what day of the week that is, but I'm sure there was news probably around 8:30 or 9 o'clock. A lot of times I like to wait until that 8:30 news is cleared out, more closer to 8:45 to 9, because that move really gets cleared. So I want to show y'all something. We got a breaker, a high, low, higher high. Now a lot of times that higher high may be just barely higher, just barely, but it's higher, so we take it as a breaker. Now, in conjunction with the breaker, we were looking for a fair value gap. We're looking for maybe an order block, something that can help us, maybe a lower time frame run on liquidity. So we have a couple of those, but not all of them. Now, where's the fair value gap? You're looking here, you tell me, where's the fair value gap? Because me personally, I don't see a big enough fair value gap trading within this breaker area. So when you don't see that, we're on a 15-minute time frame. When you don't see that, you gotta break it down to a smaller time frame. So I got my time frame set up for when I'm looking, at evaluating over the weekend. I'm looking at the weekly, daily, 4 hour. When I get intraday, I already know what my bias is from looking over the weekend, right? So as price continues to trade into a certain direction, if it's one-sided enough for me to understand that it's one way, which is we've clearly been bearish, I'm starting to look at the 2 hour, 1 hour, 30-minute, 15. That's as I'm looking to see what's the best option for me in the market. Now, boom, I'm looking at this trade. I'm knowing that I want to get bearish. I just got to figure out where. I got to find the right setup. If I don't see that fair value gap trading with pretty nice volume past or within this range of the breaker, what I want to see is a lower time frame, right? So let's go back over to breaker. High, low, higher high. The lowest down close candle is a bearish breaker. Now, we're looking for the fair value gap. We don't see it. We got to go to a smaller time frame. Boom. We go to a smaller time frame, and what do we see? I already know it's here. I wouldn't be showing you if it wasn't here. Boom. We have a slight fair value gap. Now, this is where you got to be careful, because this fair value gap, it doesn't trade fully past this breaker zone. Although we do have price at least trading with pretty good volume, 2 consecutive bearish candles past the breaker zone. what we want to see is a bigger fair value gap, to be honest with you. So we need something else. We need another confluence, because as you see, price, it traded down, but not too far. Like if you were to have taken this trade, you might have got, let's say, 30 pips. I'm gonna call it 30 pips. Not even, just barely 30 pips. And you're probably not trying to get out of the trade at that point. If you were, then you're smart, because it turned right back around, right? So this is early morning that this forms. I usually am not looking, unless it's a Monday. I'm not looking usually in the London session. So we might need something else. Now you see that we have some liquidity here that's formed as price is trading sideways. Then as the news comes into the market, price runs this liquidity, because I bet you people who entered the trade here had their stop set here, or if they entered a trade here, they had their stops here and they were hoping price to just go down. We have a run on liquidity intraday within the same day. That happens sometimes, right? And that can be frustrating, but that's why you have to be able and be careful about, taking your time, not trading too large in the beginning until you peg down where you want to get into the trade. Boom, you get a run on liquidity. Hopefully you missed that and you didn't get tagged out, but if you did, just stay consistent, because remember, we have that higher time frame order block here. And what does price do? It literally kisses the order block. It kisses it right on the bottom of it. Like, there you go, perfect symmetry. Now you have a major bearish candle here, and that's where I got in, because I knew what I was looking for. I knew that I had this fair value gap, I had the breaker, had the liquidity run here, runs out this buy side liquidity. If I can see that clear energetic movement from the market, I will take it and set my stops right there. That's exactly what I did. Took it, set my stops right here, about 15-20 pips up here, and we're off to the races. Now, only mistake that I made was, once we got about 15-ish pips in my direction that I wanted to take the trade, I usually go stops to profit. And my thought process behind that is, stops to profit, if price trades back up, kicks me out, I can always get back in and I lose no money. Whereas if price just decides it wants to come run all my stops, I lose my money and I'm really out for the day, because I don't want to have to trade again, right? So what I didn't do is just stick to the plan. I had my stops to profit, but I didn't leave the freaking trade in there. And so I end up taking like 15-20 pips just to be safe. I'm at work. I tell you I'm a scalper. If I'm at work, I'm just trying to take my profits and leave. Boom. And that's what happened. So price ended up continuing in the direction that I wanted. Ended up running out. I don't even know if there was any sell side liquidity here. And that's the other thing, is I really didn't see any immediate sell side liquidity aside from this. So I really wasn't sure where I was targeting. Usually ICT says 20 to 30 pips below the most recent sell side liquidity. So if we take that and go 20 to 30 pips below, there you go. It's just about 40 pips. You could have taken profit anywhere in that range, right? So moral of the story is, I could have left that in, but you see what happens. Price ends up running out that liquidity the next day, or yeah, exactly the next day. So you would have wanted to take profit there. So boom, that's the ICT 15-minute breaker, liquidity run, and fair value gap. Although it was a small fair value gap, it was pretty good. Now, I want to give y'all a couple more. So boom, let's get into another great setup that you can take this fall. We have two setups here back to back. We have an ICT 5-minute breaker with the fair value gap setup, and then we have an ICT 30-minute breaker with the fair value gap with the 30-minute mitigation block. So boom, let's hit both of those, right? Now, what do we have here? We already know we're bearish. We've been bearish this whole past 2 weeks, right? We already know that we're bearish. So what are we looking at? We're looking at a run on liquidity here. You've got buy side liquidity, buy side liquidity, buy side liquidity that was formed here. Prices kind of traded below, but then ran it out, right? Now, what do you have higher time frame over here? If we were to look on the 1 hour, I bet you we would see some sort of order block or something. Not so much. But if we were looking at this is the most recent up close candle. There is an order block, right? Boom. So we're going to tabulate that and just look at it. We're just going to look at it just so y'all can see that this order block stuff is legit. It really is. Like, a lot of times we can't find a fair value gap that's remained open. Like, you see this fair value gap remain open, traded past this recent breaker, I guess you could say, you already know you're bearish. But if you just want to make sure, right, just look for the most recent higher time frame order block, right? See how price finished in it, right? So boom, you have a run on liquidity. Not only do you have a run on liquidity, but what happens here? Price does not close past the midpoint of this breaker range. Now I'm talking about close. It does run its wicks past this area, past both order blocks, right? It runs out buy side liquidity. But what does it not do? It does not close above this order block range, this order block range. So you're knowing that you're already bearish. This is another confirmation that, okay, we're continuing bearish if I continue to see bearish price action. So these breakers that I've been showing you, that is the way that you understand where there's a higher time frame or a lower time frame market structure shift, right? So when you're looking, you have to pay attention, intraday, within the day. If you get a liquidity run, but then you get price action the opposite way, find your breaker, right? If you can find a breaker and you can find price trading back into that breaker, respecting it, and if you find a fair value gap across from that breaker, price respecting all those areas, you have some good confirmation for trades, right? So now let's go back to our lower time frame and see what do we have here. You should already know. What do we have? We have a high. All right, why is this thing still here? I guess that looks better. We have a high, a low, a higher high. That's a breaker. Find the lowest down close candle. Now we got to go to the 5 minute, because I said this was a 5 minute chart setup, right? So, and when I'm using these different time frames, right, I'm saying it's a 5 minute breaker because that's where the clearest breaker is. High, low, higher high. Most recent, the lowest down close candle of that high, low, higher high range. That is the breaker. Now, price trades heavy right past the breaker. When you have the breaker and fair value gap right across from the breaker, and then you have price respecting that breaker and fair value gap area, not trading back up into it, sniper entry. Take the sniper out. Take it out. Make it really large. That's where we're entering. Right there. You feel me? So, what time is it? Right? This is 7:15 in the morning. ICT says this kill zone starts around 7 to 10. Right? Usually, I like to wait until 8:39, depending on if there's news. I don't know if there's news this day or not. I didn't personally take this trade, but this is a setup you could have taken, right? But let's just say, for instance, you didn't get this sniper entry. You woke up a little bit later in the day, and you're like, bro, can I still get into a trade? I missed the 7 a.m. setup. What else is there? Here we go again. Here's a higher time frame breaker. Now, remember I said high, low, higher high, lowest down close candle is a bearish breaker, right? Fair value gap across from it, validates it, then price respects it, validates it even more. Can y'all see it? Can y'all see it? High, low, higher high. This is a higher time frame breaker. Same rules apply, okay? Same rules apply. When you take it to the 30 minute, you can see it a lot more clear. I said high, low, higher, high. You could say high, low, higher, high. Either way, you're looking at this range, lowest down close candle. Boom. Right there. It's clear. Now, what are you looking for? What are you looking for? Where are the other PDRAs at? Right? Let's move this out the way. This is just calling it out. Where are all the other PDRAs? Well, not only do we have a high, low, higher high, lowest down close candle breaker, we also have a high, low, lower high, lowest down close candle mitigation block. So I made a recent video about the combination of the mitigation block and the breaker. Here you go again, mitigation, the breaker with the mitigation block right across from it. Then what are you looking for? You're looking for that fair value gap. Do you see it? Do you see it? Where is it? Boom. Right here. Fair value gap. Front and center. What does price do? trades right back into the top of it and runs off. Now, this happens the next day, right? So we wouldn't have been probably able, unless you took this trade here, this lower high from where this breaker entry was. If you took this trade, okay, you might have been able to get it. But if you missed it, hold your horses, because the next day you get a return up into an even bigger fair value gap with more confluence, the breaker and the mitigation block, and then price trades right down off of it, right? Now, this is at 1, 2 a.m. You might not have caught that, but it's still a valid setup, right? So, I'm just saying, there's opportunities everywhere. Now, the most recent one that I did try was a 3-minute breaker. Now, this is the only case I feel like when the breakers do not work. And when I say, a lot of times ICT stuff, depending on what direction you're trading the market in, right? If you're trading with the higher time frame bias, you're usually good. But if you are trading and you're not, if you're trading with a higher time frame bias, but there is potentially some news or something like that, your trade can be ran out, the stops can be ran out, or there can be a opportunity that the trade doesn't actually run as far as you wish it would. Now, I've got a lower time frame breaker, high, low, higher, high, most recent down close candle, lowest down close candle here, fair value gap here, right? It's all in the 3-minute. Well, this is a 5-minute actually, so I guess this is a 5-minute breaker, not a 3-minute breaker. You can see price giving us this little fair value gap here, right? And then trading back up into it. Now, I took a trade here, and price basically ran out my stop, similar to the previous one that I had shown, but then ran off. So you really just got to be careful about, if there is news, you got to know that that news is going to come into the market. It's going to try to run out stops, and then after those stops are run out, usually price is going to go the direction that you already planned, right? If you're with the higher time frame bias. So that's the only, thing you got to be aware of, is that whenever you're trading any ICT setup, any setup at all, whether it's ICT, support and resistance, whatever you're trading, beware that if there is high impact news, that news probably will run out liquidity. And especially if you're in a trade like I was in this trade here, where I basically entered right here and then price tagged me out. I entered again, price tagged me out, right? I had my stops up here, price tagged me out before just plummeted, right? So I come back and look at it and I'm like, bro, I should have just waited, I guess, or I should have just been understanding that if I'm entering before the news comes out, I need to make sure that I'm aware that price is going to run me out, but it runs into a fair value gap here, touches it for the second time, and then runs off. So can't win them all, but I just gave y'all a ton of setups that y'all can use, really using that breaker and really using that fair value gap and that order block to understand not only after that hard that liquidity run has happened, to understand what you should be doing as far as when price respects that breaker, you should be looking in the direction that it's respecting, especially if it's in the same direction as the higher time frame bias. Go ahead, look for those lower highs, take that trade if it's respecting that fair value gap across from that breaker, and let it rip. See what happens. I ain't saying let it rip like all your money. I'm saying like take a responsible trade so that even if it goes wrong, you can take another one the next day or whatever. But with that said, that's all I got for y'all. I got plenty more videos coming. We're gonna do a lot more trade breakdowns, so y'all let me know what y'all want me to cover. And yeah, we out. Alright, y'all have a good one. Peace.